All right. Good morning, everybody. Hope you all had a good weekend. Real quick, I did some work. Been swapping from an old website to a new website, rebuilding everything. And the steps to the morning briefing, I laid them out. Probably still needs a little bit of work, but if you're new around here, these morning briefings are not designed to give you a leg up today, right? I'm not trying to lay out today's market for you. I'm trying to teach you how to do it so you can do it for yourself. I've been doing these for the last few years with that goal in mind. So sure, every day I give you a leg up. I do the analysis and then you have it, but that really isn't my number one goal. The number one goal is to get you to the point where you can do these on your own, because mine is tailored to meet my needs. And if you're an equity trader, say you're doing stock or small caps, or maybe you're chasing pennies or something, whatever it is that you're doing, it likely could be done better by you focused on things that you want to trade. So the whole idea of the morning briefing is to walk you through the steps to have a consistent approach to being ready to trade on the day. These steps, they're kind of universal of the things that you want to look at, where you want to look. I got lists of sites that you can go to, free things like tradinghours.com to see, what markets are still open, which ones are closed, which ones are on holiday. Talk about the sectors to look at in the morning. You can go through it at your leisure. I posted the link in the chat so you can get there. If I haven't posted it yet in your chat, then I will later this morning. So there you go. Follow up on that. It's just the steps to take, right? We do those steps every day, and consistency is the key to all of it. Having the same approach day after day after day, and then adjusting things as needed if we get something strange, like a ship stuck in the canal, if you guys remember that one, or when CrowdStrike knocked half the world's infrastructure out with a janky update. Whatever happens to be going down that day, we adjust to fit. So this morning we got small caps up the most, Japan up a quarter, everything else is flat and sideways waiting on data. It is a hurry up and wait week. That's my baseline bet, is that we're going to hold the line, run it sideways, waiting on NVIDIA. Now, at different times throughout history, there's been a particular stock or a particular interest in something that the market fixates on. And right now, NVIDIA is a representation of all AI exuberance. If they're not getting a sustained push for more, then it calls into question how strong this AI exuberance is and if it's petering out or not. Obviously, there's way more to it than just NVIDIA, but it's the poster child for all of it. So it just keeps coming back to that, right? How strong is NVIDIA? What do their sales look like? What's the demand look like? So not just what their numbers are, but what their forward guidance is going to be. And so far on their earnings, they continue to say that demand far exceeds their ability to meet it. And of course, that's a good thing. And that they continue to adapt the products that they make to meet customers globally. So sounds good, but how long can they keep it up? That's why this week, if you go look at last NVIDIA earnings, the market went sideways for almost a week, but really the 3 days before the earnings, Monday, Tuesday, and Wednesday, that's when it was really rough. And I mean a 25-point range in the ES for those 3 days. That's a tight range, right? 25 points. We've been making 100-point moves a day. We're talking about a very constricted range, right? So I got a screenshot of it because I didn't want to have to go back and try to fetch it today. This is NVIDIA before its last earnings. You can see the earnings date right there, right? So that's a pretty tight range for NVIDIA, from 92 to 95.5. But look at the S&P during that time frame. Now this is the SPX. 5320 to 5300, and we wicked down into 5290. So 30 points total. Damn, that's tight, right? So this is it going to be this way this time? I mean, come on, we don't know for sure, but that's the baseline bet for this week. And if the S&P isn't breaking out, the NASDAQ isn't breaking out, the Mag 7 isn't breaking out, then it's likely a lot of the other stocks also don't break out. Having said that, though, we saw a disconnect at the last earnings when the rest of the market really started to deviate from the Mag 7. And if they don't go up or not, the other 490 names out there have been doing their own thing with things like financials, staples, insurance doing really well, even if the Mag 7 isn't doing very well or just going sideways. We got Dally today at 2 p.m. and durable goods at 8:30. We have auctions today at 11:30. It doesn't show any at 11 or at 1 o'clock. But as I've said before, if we have any auctions anywhere, just assume that the other two do as well. I know you don't see auctions here. I get it. But I'm telling you, there's 50 to 100 economic events every single day. Every day, 50 events or more. They're not here either. And if you're thinking, oh, well, yeah, but those are probably really small, no name. You're right. Most of them are really small, but not all of them. Like QRA, a really, really, really big quarterly event, it's never on here either. So just because it's not listed on one of these sites doesn't mean that it's not impactful. Doesn't mean that it isn't there at all, right? And you could spin your wheels all day trying to gather up every single one of those economic events, and you still wouldn't get them all, because that's just the US ones. Every nation around the world has 50 to 100 every day. You're not going to get them all. The best you can do, it's what I say all the time, watch the clock. Government's lazy. They're going to do it on the half hour. They're going to do it on the new hour, right? So we're poised now, still in this topping pattern. We're on a 65-minute chart here. We've had our run up. We're sitting in a bit of a topping pattern. Now, this is a bull flag or a bull pennant. It is a bullish run because you got the flag pull and then the flag itself, but it's also a topping pattern. Now, topping patterns doesn't mean that it's going to roll over and fall, or that it has to roll over and fall, because it doesn't have to do anything. September is typically a very bearish month. However, in an election year, that isn't always the case. Add to that Jackson Hole on Friday when Powell said, it's time. Things have changed. It's time to change. Then seasonally look back at what we do after Jackson Hole typically, where we kind of go sideways for a few days, get into September, and then start that sell-off. And we're at a critical resistance and we're showing a topping pattern, and the calendar fits, the time frame fits, the mood and the bias of the market fits. So if NVIDIA holds us sideways for a few days, that'd be sideways after Jackson Hole. And then we get into September and it gets negative, or NVIDIA doesn't delight as much as everybody's focused on, and it begins the September sell-off anyways. Now, remember, NVIDIA doesn't have to say anything bad if they just don't say enough good, right? So if you're thinking, well, it doesn't look bad, everything that NVIDIA has been putting out looks really good. Yes, but is it good enough? For a continued move to the upside, we got to get through 5,700. That's not just your typical round number. It's also the point of control from the last top that we had. We've got 5691 cog line to get through as well, which is a front run to that 5,700 pivot and that point of control. So two real significant levels of resistance overhead that we still have to work our way through in an environment which is still really low environment, low volume, right? And in low volumes, we can make big moves. CPR, central pivot range. These are floor pivots with a channel around them. We have the weeks channel and we have the days channel. Right now it's an MDP, that's a missed daily pivot. We haven't hit our daily pivot, which is why it's an MDP. It won't count until tomorrow. Markets generally hit their pivot point 80% of the time. So if we don't hit it, that puts us in the 20th percentile. There's a little bit of a strategy behind that. I don't trade it, but it's worth learning the strategy just to have some insight into what we're looking at when we're looking at these pivots. You could search YouTube or Google, just type in missed daily pivot, you'll find it. I'm not pointing that out as a tradable strategy that you could go and start using, but rather learning these different strategies gives you ways to analyze the market, right? It's more insight. The central pivot range of today is completely outside of yesterday's range. They're not touching or overlapping in any way. And it's to the upside, so that's bullish. Price opened above that also, so that's bullish. It is a wider range, which implies with a wider range that if we attempt to break out, that the breakout fails, we come back in again. These channels don't make price break out or make breakouts fail. These channels don't make price do anything. They're just a way for us to try to anticipate what kind of trading day should we expect, a sideways day or a breakout day. And if we do get a breakout, is that breakout going to stick? Is it likely to stick? Right? Get some insight on that. The spot gamma index, we don't have the AM yet, but the PM one showed that we were nearly at zero. It goes from a -4 to a +4. And so if we're sitting at zero, we're basically in the center of the basketball court. We could go either way. So we're not in a high gamma. We're not in a low gamma, right? From the gamma index point of view. We were showing a Busby, which I was getting excited for. We haven't had a good Busby in a while, you know? I mean, it's been like forever. But it wasn't a Busby. It failed. It did get back to the top, though, right? Which is all the Busby owes us anyways. We got the bounce, and it ran back to the top. Cheers. We got that. But it didn't get the follow-through, right, of what makes a Busby so juicy. It's juicy. Morning, Nicole. Did you have a good weekend? We're playing Bebop with VWAP. It rhymes. Really getting nowhere at this point. Look for reciprocation, a little above, a little below, a little above, a little below. Not really seeing anything out of that yet. The ADRs at 94. So from the Globex last night, split 94 in half. Go half to the upside, half to the downside. The distance between these two red lines is that 94. we're not even expected to hit those lines today, let alone get through them, right? If it's going to be a sideways day with hurry up and wait, that implies that we stay inside the red lines. I'm going to say even more than that, it implies that we don't even get to the red lines. It's a bold statement, I suppose, but really trying to emphasize the lack of breakout potential here. And you know, on the other side of that, there's always the alternate thesis. My thesis is that we're going to base and stay sideways and not break out. That's plan A. Well, if I'm wrong, there's only one other plan, right? Plan B be that we actually do break out and run. And I think if we do get out of this range, if it's something big enough that can galvanize us and get us out of this range, then we're likely going to get to the yellow line and then some. It won't just be your typical breakout day at that point. It'll be an oh damn face ripper kind of day. We can see with the overnight cumulative volume at 41, it's just really light out there right now, right? And they're not hedging. I'm waiting for spot gamma to get a little insight here. The put wall is above the 0 gamma level. And at first blush, I see that and I think, well, that's bullish positioning, right? Because the put wall is a pretty darn good support level. It's not the biggest support level. That'd be the 0 gamma level. But the put wall and the volatility trigger, both of those are darn good resistance if we're underneath it and support if we're above it. So wouldn't this be bullish to have the 0 gamma level so far away? We would have to break Friday's low, and then we would have to break Thursday's low just to get to the 0 gamma level. And it's at the 10-day moving average. So I consider this bullish positioning, but I'd really want to hear that from spot gamma, right? It's their tools. I'd feel much more comfortable with them giving us insight on their tools than me giving us insight on their tools. $57.70 is the call wall, and we're a long ways away from that. We would have to get through the 91 cog line, then the ADR half, then this options level at 21, well, 22, then the 32 cog, then the full ADR, then we would finally get to the call wall. It's a lot of levels we'd have to get through just to get to that call wall. But as I mentioned, if we do actually come out of this range and we begin to expand, I think it'll be a face ripper and we could get to that call wall today. But that's not the base case, right? Base case is we're not going to do anything. The range has been set Friday, and that if we overshoot it all, we'll tag Thursday's high and low. I think that would be about as much as we're going to get. And I don't even think we're going to get that much. That'll keep the point of control on the 10-day, 30-minute profile in place. The TPO's point of control has moved up now, so they're more in line with each other again. This isn't expected to change anytime soon. We're an entire week away from losing these candles. So the only way this point of control is going to move now is if we go up to a new level and gather enough liquidity at that spot that it overshadows this spot, or that we go down and we revisit one of these lower levels and add more volume to it and move the profile down that way. We would have to land on a really big iceberg down here, or we would have to come down and hit into that spot and stay there long enough to build the volume up and bring that point of control down. So I just don't see how this point of control is going to move anytime soon. It's still not a support or resistance level because we're still sitting inside this zone. And as long as we're inside this zone, then we're going to come through that point of control like it isn't even there. It won't act as a support or resistance until we completely leave the range and come back to it, either from above it or below it. We've got to get away from it first and then come back to it before it'll start acting as a support or resistance. This is the 5x5, 5-day, 5-minute chart. You can see the really tight profile that we have this morning, and Friday's level. It's a classic D-shape profile with the point of control in the upper edge. That could provide a little bit of structure, but we've already cut through that level multiple times, so we're not expecting any help out of that. I think we're better off measuring the entire zone of yesterday, putting in our buy zone and sell zones and marking that 50% off of there. If we do that, it would look a bit like this. At your sell zone, the buy zone, the ADRs, and then the halfback from yesterday. Now, I know it says sell and buy, but that's not where I'm recommending people buy and sell, right? That's sell side liquidity and buy side liquidity. If we get into that liquidity, we've got to get through it to be able to break down and really go lower. If we get up here into the sell zone, we have to get through that to be able to go higher and get to the ADR. It's where we expect that liquidity. So if you see me posting these pictures somewhere and it says buy zone, that's not where I'm telling you to buy, which, you know, that's not a bad place to buy, but it's not recommendations to trade. It's just pointing out where the liquidity is. It's buy side liquidity. We're still more than 2% above the 10-week. So that keeps us in the sweet spot. That's exactly where we want to be. We don't want to be testing against the highs up here, and we don't want to be below 2% because that gets us a lot closer to zero, right? You get too close to the 10 and you'll start to gravitate to it like gravity. So 2% is a good spot. We pulled back a little bit last week off of that 2.75 area. So we're just sitting really good here. This shows that we're not overbought, we're not overextended, we haven't run too far too fast. It doesn't owe us a pullback or a correction. We're just exactly where we need to be. 1.35% above the 10-day. Generally, we like that 10-day to stay under 1.5. So we're kind of close to it. We got outside of it last week in that run back up last week or two. But we've come back inside the box. This is right where we want to be. So we're kind of on the edge. We wouldn't want to expand too far beyond that 1.5. And if we go sideways for 2 days, it's going to give both of these moving averages time to catch up to us, which is the idea, right? We want that distance, that correction. Markets can correct through price movement. They can pull back towards the mean, or they can correct through time where we go sideways and let the mean work itself up to us. On Friday, we were looking at the weekly expected move. And I do share this indicator in the Thinkorswim workbook, but there's like 10 different versions of it. I've got one that counts how many times we closed outside of the box, how many times we were outside the box on Friday. I've got ones that will put like a cloud around it, basically like I just drew here. The indicators, even though there's like 10 different versions, it still draws the box on every one of them. So, you know, if you're looking at them and you're thinking, well, which one do I get? I mean, you can try them all, or you just, you know, keep picking ones until you find the one you like. They all are going to do the same thing though, draw the box. So on Friday morning, when we were looking at this, it wasn't set in stone yet. It was just a preview of what it could be. We take the week that we had and we put it on this week's range, and we ask that question: what's volatility look like this week? Is it greater or less than last week? Now, when we were looking at it Friday, it was greater, but now it's not, right? It's abated quite a bit. And if you read the founder's note from Friday, they talked about that massive vol crush once Powell started talking. It was an interesting read. If you haven't read it yet, it's worth circling back to Friday's Spot Gamma's founder's note. But now that that vol crush is gone, the range was less by Friday's close, and now they're nearly the same. We have the same amount of volatility this week as we had last week. On one hand, that's good, right? But on the other, it's kind of concerning. I mean, last week we had Powell, we had FOMC minutes, we had Bank of Japan meeting with the PMs, right? Parliament in Japan. What the heck do we have this week that's so big that it matches all of that from last week? NVDA earnings. That's it. That's it. NVIDIA earnings is that big? Yeah. Right. So hopefully that kind of highlights how concerned the market is with NVIDIA's earnings. This was Jackson Hole last time, 2023. And we popped for a week. We got an inside week breakout, and we expanded almost an entire standard deviation higher outside the box a week later. Then we got into September and sold off. This is the Jackson Hole where he told the market we were going to stay higher for longer, and did his little mic drop moment. And so obviously, not only did we sell off that day, we sold off for the rest of that week, and then got a little bit of a mean reversion in the first week of September before we continued that downward move. That's why when you go back and look at these dates, you want more than just, oh, that was the date. You want some context. Was it a date during the COVID era? Was it a date where they were still raising rates, cutting rates? And not just Jackson Hole, but any economic event that you go back and look at. Just marking the event on the chart isn't necessarily good enough when you look at what happened after the event came out. This is 2021, Jackson Hole event. That next week, we had a little bit of a pop-up on Monday, and then we spent the rest of the week inside day, IX10, doing nothing more than that, right? Just holding inside the line. This is the day after the event. Just held the line before we got into September, and then we sold off. Small caps are up this morning, and we are looking for a sea change. Bonds have changed, and we're expecting more of that. We could see more on the small caps front. If we do, we could start to see maybe a little bit of a resurgence in short covering rally sort of thing. So things that are down, nat gas, which is a joke anyways, the China internet or the K-Web, China ADRs, also just your regular China ETF, MCHI. So those are the things that are down, basically just China. Take a look at the other side, see what's up. The VIX, oil, the momentum index is up this morning. More oil, energy, and there was a little bit of talk on that, right? The Middle East tensions ratcheted it up another level over the weekend, and some of this energy being up could be directly attributed to that. Metals and mining also up. Uranium, banks, gold miners, home construction, and almost solar. If it goes just a little bit more, we'll have solar up. So, and everything else rally this morning. Oh man, there's your pop in crude. Looks like we could get a test of 80 this week, but we're already up more than 2.75% this morning. So I don't know how much more we're going to get out of it today. 10-year starting to build a little bit of a basket down here. It's back above that 3.8. The dollar also starting a little bit of a scoop along these lows. You know, if you think about a double bottom being a bear trap and having the market come down and break out and then trap those bears and rally back up, you would want it to be more of a V shape, right? You want to see that trap snap shut, catch those bears and squeeze them until their heads pop. You don't want a gradual climb back up out of the hole because, well, then they didn't get trapped. They had plenty of time to get out of their positions, and then we don't get that violent rip back up in the other direction. So this isn't as bullish as it would seem if we were thinking about it from that perspective. All right, so we got the 2-year here, like a bear flag pattern, and the dollar here, same pattern. And then we got the ES here in a completely opposite pattern. Now, typically we'd say, well, yeah, that's what we've had over the last few years. Dollar down, 2-year down, the ES up. Yes, but in the last few weeks, we've seen this be completely different where all three of these are going up or all three of these are going down. So we're disconnected today from that. And now we're back to what it has been. Well, Powell said we're done with what has been. We're going to start doing something else. It's not reflecting here this morning. We want to see if that changes. At the moment, with the 2-year rising and the dollar rising coming up off of these lows, if we're going to continue to get that rise, then my expectation is the ES is going to backtrack and test the halfway point of yesterday and then, you know, get underneath that halfback and try that 32 cog line. This call wall isn't right, by the way. It just didn't get updated. There's so many levels and so many things to update every day. There it is. All right, we got the AM edition of the Founders Note out. I will get it shared into the chat along with that morning briefing prep. And it's not done yet. You know, I I'm not fast when it comes to doing websites. You would think it'd be easy. I thought it was going to be easy to do websites, but I'm not a website guy. So it is not. All right, crude, oil, VIX. We're in just a pullback, right? When we're looking at the negativity right now, we think about the pullback. That's all that it is right now, right? Just a pullback. We're above 15, but we're less than 20, and that's where we're at. So we need the VIX back below 15 for a low vol bullish environment. So look at the top leaders this morning. Crude, uranium, energy, and then finally silver. So precious metals. That's what's leading this morning. You get behind that, you get some banks, and then small caps, more gold. This is the miners, pot stocks. Little bit of Bitcoin. It's up a little bit, but this isn't up very much compared to that move we had Friday. We're still underneath the 50, still a critical level to deal with. We did get that gap closed. Well, I guess it was already closed. It got closed back here. Next level to close is 22.5. I don't see us getting there in a straight shot. Now we get that breakout in gold, but we've still got that sell side liquidity up there to deal with. And looking at the breakout so far, it doesn't look really all that impressive. Now we had that same kind of breakout Friday. And when we got into the regular trading session, that one 15-minute candle took us to the high of the day, and that was pretty much it. Yeah, pot stocks are up, but they don't look good. Even if we get anything today, there's a half back up here that needs to be dealt with. I don't even think we can get to 750 unless we get some sort of news. These have been moving around quite a bit in relation to the polling on the presidential election, right? You got your Trump trade and then you got your Harris trade. And they kind of ebb and flow based on how those two are doing in the polls. Oh, speaking of the DJT, Trump's share of this company, his shares, they're still in lockup. But that lockup ends September 25th. So it's something to keep in mind too, right? So if we're going to get a run today, we need those Mag 7 to come into play. And if we continue to see this capital rotation, you very likely won't see the Mag 7. It'll be the everything else. If that's the case, things like advanced decline, the weighted AD, maybe even the tick, the NYSE $ TICK, those may all be kind of janky because they're looking at breadth. And if we have, 495 companies out there all doing really good, but the Mag 7 is sideways, then those breadth tools are going to say, it looks great, it looks bullish. Look at all this awesome flow. And yet we're not going anywhere because the Mag 7 isn't going anywhere and the indexes aren't going anywhere because we're waiting on NVIDIA. So, this may be what they call the stock pickers market, where you go out and you're trading, I don't know, Pepsi and Campbell's soup. Yay. Right? Who cares as long as they're moving, right? So what I got for you guys, be careful, be safe, watch the clock. See y'all tomorrow.